Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. Today, we're going to be talking with Will Rhind from Granite Share, so let's do this. It is so great to meet you, Will. um, are you frozen? Are we good? Is this too much for my poor internet to handle?
Bit frozen.
Okay, are we good now?
Yeah,
Okay, good. I'm
I
glad.
was just freezing up a little bit, but hopefully that's just a glitch.
Yeah. Um, yeah, so thank you so much for agreeing to uh, talk with me today.
Thank you for having me.
Um, so if people don't know, this is Will Rhind from Granite Shares. We're here to talk about Yield Boost. Would you mind telling my audience a little bit more about Yield Boost? Because I just did a video about this, but it's better from the CEO.
Yeah, sure, no, happy to. So YieldBoost are a range of ETFs that are issued by us, focusing on high yields or high distributions, paying weekly specifically. And they're part of an ETF sort of family that's become very popular over the recent sort of years, and that's options-based income ETFs. So Yield Boost are options-based ETFs as well, but where they're unique is that they sell options on leveraged ETFs, and we'll get into the reason for that in a second, but that's the secret sauce. So the ETFs themselves are not leveraged. It just means you're generating 2 times if it's an underlying 2 times ETF, or 3 times if it's an underlying 3 times ETF, the premium available. So the yields are a lot higher. So when you look at the yields of Yield Boost and you might see figures like 100% or 150%, the reason why that's happening is because of the strategy that's being employed. So weekly distributions aiming to generate the highest yields, or certainly some of the highest yields in the market, through selling options.
Yeah. Okay. So traditionally, leveraged funds, they're not really meant to buy and hold. You're supposed to swing trade and not be in it for a long time. Are yield boosts supposed are like what are the use cases for yield boost for income investors?
Yeah, look, I think this is one point that I think I really want to get across, is that although we're using a leveraged asset as the underlying for the basis of selling options, yield boost ETFs are not leveraged. So if you were to dissect a yield boost ETF, it's put options that are being sold and put options that are being bought. That's it. So for Yield Boost, the use case is buy and hold, weekly dividends, weekly distributions. It's just a unleveraged income strategy. Like I said, the secret sauce to generating these really high yields is that we're selling put options on a volatile asset, and that asset just so happens to be 2 times more volatile than, say, if it's the case of TSYY, it's 2 times more volatile than Tesla stock because it's a 2 times Tesla stock ETF. So the use case is long-term buy and hold investing, clearly for an investor who's more aggressive than somebody who's like super conservative. Just like leveraged ETFs themselves are for people who want aggressive growth and want to have a very high conviction view on a Tesla, an Nvidia, whatever the stock might be.
Do you think that these high income investors, because these have only been legal for a couple of years, are they more engaged than regular retail investors? Like, do you think that there's anything unique about a high income investor?
That's a great question. And it's sort of difficult for me to say because we don't have a huge amount of products in our arsenal that do all sorts of different things that we could sort of compare. What I would say is that I think they are highly engaged, certainly. Whether they are more engaged than, say, investors who like leveraged ETFs, investors that like certain types of ETF strategies, be it more conservative, etc. I don't know, but there's certainly a very engaged community because investing just in itself is something that people are very passionate about, and showing portfolios, income generated, etc., is something that I think people are really interested in. So definitely the community is engaged. Can I say they're more engaged than other communities? I'm not sure, but certainly there's a high amount of engagement, anything to do with options-based income.
Yes, I have a few questions from my community, if you don't mind.
Of course, go
Um,
for it.
so I think the first question is, from what period does Yield Boost pay? Because the Round Hill ones, it's from 2 weeks prior. Like the week of trading was 2 weeks prior, and then you do the payout. So I think that is a little bit of a confusion that's there.
Oh, okay. So it's every week, and we started doing it monthly.
Yes.
And we realized that what we were actually doing was we were selling the weekly option,
Yes.
taking the premium. And so, to your point about Roundhill or others, you are accruing that premium and then paying it out on a monthly basis. So, Yield Boost, we went to weekly just because we were selling weekly options anyway. And so we thought we should just distribute them on a weekly basis. So it's for that period, for that week.
Okay, because usually the options they expire on Friday. So is it the Friday from the previous week, and then they're doing the declaration date for the next Wednesday?
Yeah, the actual payout date, I believe,
Yeah.
is the Friday. Sorry, excuse me. The payout date, I think, is the Tuesday. So be
Yes.
selling an option on a Friday for a payout on a Tuesday.
Okay. I think that makes sense.
I had to
um,
look. I had to look at my own schedule in terms of when the
yeah.
actual precise dates are. But it's
Yeah, because
you're
I
selling.
usually think about it on declaration date. Yield Boost declares on Thursdays,
That's
and
right.
options expire on Friday. So do you sell the put on Friday, and then we just get the premium like
For that
for
week.
for that week on Friday? Okay,
I think that's right.
okay.
Yes.
I'll get a follow up later just to make sure we have that correct, because um, a lot of YouTubers, they like to go through the trades that you all are
Okay.
doing, which I actually did want to ask you about, because Yield Max, they post their intraday trades, which allows the content creators to actually go through, because at the end of every day you do post your holdings, but
Yep.
because Yield Max also posts the intraday trades, we were able to say like, oh, they made this much money or they lost this much money. It's just more information that we can get
Yep.
out to make it more transparent, so that people can educate themselves to see how it's doing, because
Yep.
you aren't leveraged, but you are selling puts on a leveraged product, which takes more
Yep.
education.
Yep. Yeah, and I think that's something that, as it evolves, part of the answer to that question is that when the funds don't have a lot of assets in them, it's a bit more sort of, or it's less interesting, I think, for people because the strategy is quite straightforward. But as we're building now, quite significant assets and is growing, then that gets to be more interesting for people. So I think we'll take that feedback on board, and certainly I think there's a point in time when that probably is something that we can do.
Okay, good. Yeah, because another person from my audience has asked, from which dates do you calculate the yields from on your website? Because they've been trying to calculate it themselves and it doesn't match.
Yeah,
So it can be a little confusing, because I think it's calculated every day based off of the NAV, right? Or
it depends on what they mean by the yield. Um, it depends on what date that they are referring to, because obviously it changes every day, like you said. depending on what distribution you're looking at. But I think the yield that typically you'll see quoted is from the actual amount that's distributed on the distribution date.
Okay, from the distribution date. Thank you. So I know that you have a European branch and an Asian branch to Granite shares. Do you have any plans to actually have these single stock ETFs in those markets too?
We actually started, so leaving aside YieldBoost for a second, we started the leverage single stock business actually in Europe first. So that's the majority of what we have in Europe. Asia is really more of a distribution hub. So we distribute or we market our principally US based ETFs into Asian markets. And they're super popular over in Asia because people have a very growth orientated mindset and want to and love US tech stocks basically. So we started in Europe, bought it to the US, and now we're almost kind of go back in terms of the YieldBoost family that's really catching on now. I think will be a big sort of growth engine for the company. Totally unique strategy. There's no other firm doing what YieldBoost does. So we'd like to obviously then replicate that in other markets.
Yes, because I just met Cashflow King. He's a European-based high-income content creator, and it is so difficult for anything to happen in Europe. And I had no idea that like you have to do like an ETC wrapper and all this stuff for, and it sounds like a big pain in the butt, but there's only like two funds for high-income investors in Europe, so it's a pretty big.
Another part of it, Amy, is that the retail community is just not as advanced as it is here in the US and in Asia. And that's partly a legacy of regulation. That's partly a legacy of the products and the firms that have been that are in the market and providing. So it's a complicated issue. But just to give you one stat, for example, the US is the largest market in the world, as we all know, but it's the largest ETF market in the world by quite a long way. And then if you were to take the continent of Europe, that would be second to the US, but it's quite far away in terms of assets. And Asia, although Asia started a lot later, Asian assets in terms of ETFs will most likely surpass Europe in the next couple of years. And so it just gives you a sense of, you have the US is growing really strongly, Asia is growing really strongly, but Europe is, it's just not the same.
Yes. Yeah. So since these are buy and hold strategies, like what would you recommend retail investors do to hedge when they invest in something like YieldBoost?
I mean, I can't give specific recommendations because we don't give financial advice.
Okay.
But I think it's fair to say that YieldBoost, there's no reward without risk. So if we're saying that these are the highest yielding ETFs in the market, or certainly among the highest yielding ETFs, then there obviously has to be a catch. And with a very high yielding product like this, when we sell an option, in our case, we sell weekly put options, then we are generating a huge amount of premium from that. Now, as we all know, or as you know, your community will know, you're exposed to the downside of that particular underlying. Your upside is capped by the premium that you receive. And the way that you can try and get around this concept of NAV erosion, which you see with other providers out there, is we also buy put options on the underlying. Now, that cannot insulate you entirely, because again, there has to be a trade-off between earning good yields and having some risk in the price. But it is a way that we try and protect that. So I think it's a sort of maybe long-winded way of saying, yield boost ETFs or high yielding ETFs should be a part of what you do, but probably shouldn't be, everything that you do. Just like leveraged ETFs, absolutely great if you've got very high conviction view on Tesla or Nvidia, Palantir, buy a 2 times leveraged ETF, but that should never be all you're doing. It should be part of a diversified portfolio. And I think where we see people using yield boost is in combination with other yielding assets. Some are obviously going to be more conservative on that spectrum versus others like yield boost, which are going to be on the more aggressive side.
So this is your fault for mentioning Palantir. Are you planning on filing for more single stocks, like on MSTR and Palantir specifically?
Yes, short answer.
Yes, good.
But our secret sauce is a little bit different because remember, we are selling options on a leveraged ETF. So that means there has to be a leveraged ETF in place first, number one. And number two, the options market for that leveraged ETF has to be developed enough whereby there's enough liquidity for us to comfortably trade in those options markets. So certainly, as some of these ETFs get much more established, and in the case of Palantir, I think, and MicroStrategy, we're certainly there in terms of being able to offer options, but it won't be for everything. It has to be on those liquid underlyings where there's a liquid 2x ETF or a 3x ETF. There's an options market on that, which is liquid, and then we can offer yield boost.
Are you planning on doing a basket, like kind of like a YMAX of just every yield boost in a single ETF so that we don't have to choose? We can just own one thing?
Yeah, we'd like to do that. And as you may or may not know, we originally filed for 20 yield boost ETFs. We've brought 5 of those to market. We may or may not do the whole 20, but we've got another filing that's out there again for a lot more products. And the short answer is, in order for us to offer something diversified, there are specific regulatory diversification rules. So we need a bit more, or we need a few more ETFs than just 5. But it's certainly something on our radar. We'd love to offer those kind of products. And that might be, again, going back to your question about, how do people diversify? And maybe one way for people to consider doing that is just by doing a fund which has all the yield boost or some selection of yield boost ETFs in there.
Yes. My request would be when you do that is to have it pay on a different date. Like, don't just have the YMAX of yield boost on the same date, because it's not, because back when these people are not going to be buying out of that fund to go into their yield boost. They'll have individual yield boosts that they have high conviction on, and then also the basket. So it would be nice if they paid on different days. So I think that is most of my questions. Did you have anything specific that you wanted to talk about today?
I think it's really just to try and, look, my job is education. My job is to make sure that people understand what the product is, how it works, and I guess to put a face to the name around Granite Shares and Yield Boost in particular, because this is a very popular part of the market. The majority of people probably know us more for the leveraged single stock ETF business that we pioneered here and in Europe as well. And so while those are super popular, that gave us the platform to then transition to yield boost ETFs. So we're building that business now. Yield boost has been going for, TSYY, which is our, I guess it's our oldest one, even though it's crazy to say that, given it's really not even been over 6 months. But we launched in December last year, and we're over 100 million in terms of AUM for the 5 funds. I think it's almost 130 million. So it's growing really quickly. I'm getting inflows every day, but we want to make sure, obviously, that people have the information that they need. They understand what we're trying to do, how the strategies work. And I think some of the things I see online, that probably the most common one is that the YieldBOOST ETFs are leveraged, and that's probably the most common misunderstanding in that. And we'll try and make sure that everybody has the accurate information that they need to make informed investment decisions.
Okay. So, I mean, I have this website called YieldMite, and I'm managing it. It's a comparison tool for high income ETFs. And I gotta tell you, there are a lot of funds that are coming out. How are you dealing with like almost an oversaturation in this market?
Look, I'm the founder of this business,
Yes.
and I've been doing this in terms of the ETF business now for 25 years. I was here right at the beginning with iShares, which is BlackRock. So I've seen all of this develop, and believe it or not, Amy, when we had 100 ETFs in the entire world, people were saying that at that time that hey, we've got enough product out there. We don't need to be launching more ETFs. I'm a big sort of believer in free markets, and I believe that the market is the ultimate sort of voting machine. And when we or competitors launch products, we live and die by the success. In other words, the assets that are raised by people buying that particular ETF. So the more that people buy, that tells me that the market has natural demand for these strategies. And the industry as a whole, depending on whose research you look at, is still projected to grow anywhere from probably 10 to 15% on the very conservative end to 25% per annum on the more aggressive side over the next sort of 10 years. And the ETF wrapper itself is really just the new technology that's replacing the old technology, which is the mutual fund. So the industry's growing, the world's getting wealthier, and there's a massive generational transfer of wealth from boomers to younger generations. And so while the world keeps growing and keeps getting wealthier, there's going to be more demand for investment products. And I'd like to think that we're out there trying to provide solutions that people want. And ultimately, if we're doing our job correctly, people will buy YieldBOOST ETFs, and that will be the natural way of the market telling that there's value. But if people don't buy it, then that's also the market's way of saying there is no value, and we've reached that point. So we're not there yet. And I think the other thing that's really key for us is that, again, as an independent company, we have to offer products that add value to people. We have to offer things that are differentiated. And you make a great point, Amy. There's a lot of copycats jumping on the bandwagon, whether it be in leveraged funds or whether it be in options-based income and other things. So there's a lot of guys that are trying to copy what we're doing. But the important thing is to stay unique. And so far, YieldBOOST remains unique as the only ETF strategies out there that are doing the specific strategy that we employ, i.e. this bullish put spread using options on underlying leveraged ETFs.
Yeah. And I like it. Like I've done my own put spreads because they take less capital than doing it. But put spreads as an individual are dangerous because you can actually lose all of your money. You don't get the shares if you lose. So if you do like just you sell a put, the worst thing that's going to happen is you have to buy the shares.
Yeah.
When you sell a put, like if the market goes really down, people I think a lot of people, they get really too protective of their NAV, but when the ETF goes down, like the value of the price of it goes down, but you still own those shares. So when the market recovers, like hopefully YieldBOOST will also recover the NAV eventually, but you'll still own those shares.
Yeah, and you make a great point there because that's I think a thing that gets lost also is that this is something that people can't do themselves, and when you do a put spread or other options-based strategies, there is obviously risk that goes beyond just the price movement. And we get this with leveraged ETFs as well. Like the beauty of buying a leveraged ETF, like one of the biggest selling points of our single stock and other people in the industry, it's not just us, you can't lose more than your initial investment. And while obviously no one wants to lose their initial investment, you cannot say the same for traditional forms of leverage, where you can be exposed to losing an amount much more than your initial investment amount. So there is an inherent, safety mechanism in there by saying, yes, we're giving you access to leverage, but you can't lose more than the amount that you put in. And I think a similar thing for YieldBoost, where we're saying, yes, there's risk in doing some of these option strategies, but by packaging it in ETF, you're taking that away and you're able to deliver a strategy that people cannot replicate themselves by sitting at home. And I think that's an important thing to always remember in terms of why you pay for active management.
Yes. So another big thing that's come up lately is return of capital. I know it's not set in stone until the end of the year, but what is your projection for these yield boosts? Are they going to be tax efficient, or what percentage of ROC?
That is so, almost impossible to predict. And the return of capital, I think, just maybe one point just to be clear, is that the return of capital is, if that's what you mean by tax efficiency,
yes,
then the return of capital that's being generated is coming from the underlying options. So it's not the fund selling assets to meet some kind of distribution hurdle. It's coming from the tax consequences of selling an option, which expires at a certain level vis-a-vis where you bought it. So I think so far there's a bit of a mixed bag, but as you'll see, some of the yield boost funds, the distribution is 100% return on capital, others less so. But it's just very difficult to predict because it's all about where the option expires.
Yeah, totally. I'm looking at my list, like I have more things to ask you.
Yeah, go for it.
But so I'm personally, I love doing leverage things, but my own life circumstances, I've had to like move you all to my Roth IRA where I cannot use margin. But I do think that this is a fantastic offering that you all have. But I don't actually have any more questions right now, so.
Well, thank you so much. And I will come back to you. I just want to make sure that we're completely clear for your audience on the payment dates. Those are specific questions you asked, because I want to make sure that we're giving accurate information. And I'll talk to the portfolio management team and make sure that we clarify that.
Yes, thank you so much. It really helps with me when I'm talking about it too, and when I'll let the other creators I know now because we do like to mention these things, because it can't all just be yield max all the time. It can't just be all round hill. There is room. It's not a scarcity mindset. There is room for everybody, because wealth is building in the world, and you pay.
And there has to be differentiation. Yes. And again, where you have a different offering, just like the value proposition for a 2x Tesla ETF is obviously 2 times the daily return of Tesla stock. So the value proposition for a yield boost ETF, if it's an underlying leveraged Tesla, is 2 times the yield of an unleveraged Tesla. And so it has to be the case that there's going to be room in for the right investor, room in people's portfolio for that, who are seeking that high, really high income, that really high yield. So we'll get back to you, make sure we clarify the specific payment dates to make sure that's clear. But the other thing that's been great is, we changed the monthly distribution to weekly based on community feedback. And for anybody that if you don't follow us on X, please do at Granite Shares, and always suggest these kind of things. If you think that we are missing a trick, or you think that there's something that we can do better, we really listen to it. So we love hearing people's feedback, and to the extent that we can optimize, we can change things, we'll certainly do it if it's feasible and there's enough demand for it. And obviously that goes for new products. We'll constantly get people, coming to us saying, "Can you do this? Can you do that?" We love hearing that.
Yeah, I just remembered someone else asked, have you heard of the new synthetic collars that as a strategy?
I don't know, to be honest with you. I'd be
Okay.
purely speculating if I.
Okay. Yes, because you all, most of these high income ETFs are actually doing cover call strategies, and
Yeah.
Defiance does puts, but they don't protect them like you all are. And I wasn't sure if you all did 100% protection, like it's 100% spreads, but I think it is, right?
No, it's we sell options. We buy puts that are around about one standard deviation out of the money.
Okay.
And so, again, it's there's always a trade-off. If we try to do 100% protection, then the yield comes down. So there has to be a bit of risk taking to generate the amount of yield that we're generating. But at the same time, because of the amount of premium, if you're targeting 2 times the income of what you'd get with a yield max, etc., then you have enough premium to pay for some protection. And so that's what's going on.
So are you just using one standard deviation? But like I've heard that there's an algorithm that actually calculates the optimal amount of leverage to have out. Like, for example, for the S&P 500, it's about 1.6x leverage. So are you using algorithms to calculate how much deviation depending on like market volatility, or is it just a set and forget?
We certainly do not do that, and I'd be curious as to where that information comes from about the optimal amount on the S&P, because there's huge amounts of variance that go into what may or may not be, and the most important probably is the time period that you hold for. So the reason why we do 2x is that, and it's constant leverage, is because you want to give somebody the exact same outcome every day. And irrespective of whether they buy the product today, whether they buy it in 6 months' time or 12 months' time, they get exactly what they say on the tin. If you start to do a rebalance, for example, not every day to reset the leverage, but you reset it on a weekly basis or a monthly basis, you start to deviate from that. So after the first day, you might buy the product and you might be getting less than the stated leverage amount. It just becomes very difficult to calculate what that actual return is and where the attribution comes from. So the long story short is that I think for YieldBOOST, again, the fund is not leveraged. It's just selling an option and buying an option. The strategy is to sell options that are at the money, or certainly quite close to being at the money, to generate that premium, but try and protect the position by buying puts at the same time. For the single stock levered ETFs, it's 2 times leveraged. That's the stated investment objective, irrespective of whether the market goes up, whether the market's down. It's over a daily basis, try and return, if it's a long fund, 2 times the return of Tesla, 2 times the return of Palantir, or whatever. And if it's a short fund, if the underlying stock goes down, it's plus 2x the minus return. So if it goes down by 2% a day, it's up 4%.
So yeah, Granite Shares has short ETFs that are 2x.
Yes.
Do you see yourself doing a inverse YieldBOOST at some point?
It'd be difficult. Look, I think the one thing I'll say about short funds, and you'll see that we don't offer mirror strategies. So, for every 2x long, we don't have a corresponding 2x short. The reason for that is that market is naturally skewed long. So investors, I think, so much so that investors perhaps think about long almost, dogmatically compared to shorts. In other words, a lot of the times we'll see people buy a 2x long when the underlying's falling way more than we'll see people buy a 2x short in the same circumstance. And I think that goes to the mentality, the psychology of, I want to buy something when it's low and hope that it goes higher, instead of, I want to buy something and hope that it goes lower. That's a sort of a...
I'm laughing because I'm like, well, we also want to buy high and hope it goes higher.
Yeah, that too. But it's the psychology of something going up in price,
Yes.
as opposed to wanting something to go down in price.
Yes.
And I think, again, with Yield Boost, we certainly have to think about it as the offering evolves. But as far as really we can tell, the market is skewed towards longer term investing. It's people who put money in, want to collect weekly distributions, and maybe there is a short strategy that would help. But at the moment, I think the vast majority of investor behavior is geared towards that buying.
Okay. Yeah. I mean, I would rather bet on something to go up than to bet on something going down. It doesn't usually work out for people. So I was just curious. So
yeah, it's interesting. There's definitely demand for it. There's just for the corresponding short, it's never nearly as big as the corresponding long. So our 2x NVIDIA short, for example, would be way smaller than our 2x NVIDIA long. And even in the depths of the market, sort of the tariff panic, earlier in this year, you definitely saw an increase in the shorts, but it was nowhere near sort of people trying to buy the dip on the long, which I think is interesting.
that is interesting. Yeah, because if you're in leverage stuff, you probably shouldn't have that much margin anyway. So, but yeah, it's just, for me, inverse and shorting should not be long term. Like, I wouldn't want to be in it for months. It's gonna lose money over time. That's
And
just
hopefully the market conditions are not that bad that it's going to be something that you should own for months.
yeah. Yeah, so thank you so much for coming on here and educating us all about my channel is Bad Financial Decisions, where we go over high income ETFs. And thank you so much for coming.
Thank you, Amy. It'd be an absolute pleasure. Thank you.
I'll see. Oh, I'm looking. I don't know if you can see it, but my sheep are over there.
Oh, where are you?
I'm in Tennessee. So.
Tennessee.
Yes. So.
Nice. Whereabouts?
Near Bristol, like on the eastern part. So.
Okay.
Yeah.
I won't pretend to know exactly where that is, but Tennessee's nice place. Rolling hills, a bit like the English countryside.
Yeah, I like it here. It's nice and peaceful. So, but anyways, I'll talk to you later, and I'm looking forward to getting that information about when the pay period is. So.
Sounds good.
Okay.
Thanks, Amy.
I'll talk to you
Appreciate
later.
it.
Bye.
Bye.
Hopefully you all could hear that, because I forgot to check the volume before I hit record. I remembered to get the brightness up on my screen, so we got that going for us, which is nice. But I couldn't go an entire interview without talking about YieldMate. This is the website that I created, and YieldBoost, if you go to the issuers, you can go click on Granite Shares, and they declare on Thursdays, they pay on Tuesdays. You heard it from the man. These are not a leveraged ETF. They just sell puts. Well, they do put spreads on a leveraged asset. So these are not themselves leveraged, which is nice. Still means I think they have like a 70% margin maintenance on Robinhood. So hopefully I asked all the questions that you all wanted answered, and I personally would like to have the intraday trades. So we'll see, but they're going to follow back on the pay period question. And it was a lovely conversation, and hopefully you all enjoyed that too. Today on Financial Philharmonics, because I'm doing this at noon and it hasn't been published yet, it's Over My Head. It's an electropop ballad, and I like it, and I think you might too. So, anyways, I'll talk to you all later. Bye.